Apple has just been valued at $5 trillion, the second company to achieve that valuation ever. The second was Nvidia, and it has decreased in value since then. Now, Apple is the most valuable company in the world. How did it get this way? Is it overvalued? Is it undervalued? Is it way out of reality? Let's have a look and see what we can see. So we want to find the latest Q2 results, and we also want to have a look at the annual report. So I've already got those opened up, and let's have a look. So looking at our income statement that has the details for the last 3 years on it, is where we see some general trends. So the business in its products division, it makes around 300 billion in sales each year. Hasn't really seen too much growth there over the last 3 years up until September 2025. Now, how much does it cost those products? So it's about, they sell for 3 and it costs them 2, Apple 2. And so they get to keep $1 for every $3 that they spend for the products division. Now, what about the services arm of the business? We can see that the business is growing from 85 billion, 96 billion, 109 billion, but the services cost significantly less. So looking at this, for every $4 that Apple spend and get back in sales, they get to keep $3 of it, which is a very profitable part of the business. And that part of the business is growing. Now, if we have a look at the latest Q2 results, what else can we see? Well, we can see that for the period ending March, the services arm has grown from this time last year, 52 up to 60 billion, but the products division has grown as well. So it's gone from $166 billion up to $193 billion. So now the products division is now growing as well. And we can see that the cost of those hasn't grown out of proportion as well. So it's still making all that profit at the end of the day. Now let's go back to the annual report because we want to see how much cash this business actually makes. So we get to our cash flow statement. We want to find our cash generated from operating activities, which is in the top third of the cash flow statement. We can see that it's bounced around a little bit. Now we expect this to be a bit bumpier than our revenue and our net income statement because net income is definitely numbers that like to get fudged and they like to keep it really smooth because investors like that. Cash flow is where the money's at though, and we want to check that out. So we can see that it's bounced around, but overall it's around that $110 billion each year. Now what we do here is to get the free cash flow, we get this number, cash generated by operating activities, and we subtract the property, plant and equipment, which we can see has varied a little bit through the years. We expect it to increase it a little bit. So all I've done in this next page that I'll go to is all I've done is subtracted this number from this one, and we get $98 billion. Now, is the business overvalued or undervalued? So that gives us an indication looking at those financial statements. And I've done a bit of homework on Apple in terms of fundamental analysis. So looking through the rest of the annual reports and having a look at how this business is run. Have they mastered their customer? Do they have a good moat around the business? And is management rational and they know what they're doing? Can I trust them? Now, having done that, looking at the growth over the last 3 years of that services arm, I can see that it's growing at about 13-14% across those years. Now I need to come up with a figure for what that growth rate is going to be for around the next 10 years. And so we want to make sure we're conservative. We're not going to come in here and put, I reckon it's going to go up and be 50%, because that's completely unrealistic. So to be able to do this calculation, we've got that base year free cash flow. we've got our number of shares outstanding, which you can either look up from Apple itself or look into Google and get the results from there and just validate it. And we grab our current share price. So these are all kind of numbers that we can have influence in, mainly this one. And now we want to come up with our growth rate and a period of time that we want that for. So I usually just use 10 years. A discount rate, I like to use 6%. Because pretty much I can get that in the stock market by just investing in index funds. And over the long term, over a 100-year period, 6% is pretty much the average for shares. So it's a pretty good zero or risk-free rate. Our growth rate that I've selected for rate to perpetuity just means how is this business going to grow forever, pretty much. And I've said that, yeah, I believe Apple can continue to grow and hold on to its position and have enough competitive advantage and brand around it that it can maintain at least with inflation. So where do I think this number is going to be? So for me, I think a very conservative estimate is about an 8% per year growth rate on that free cash flow over the next 10 years, and then going down to this 3%. So what does that mean for us? This does our calculation for us, and it discounts those cash flows back to today to see what it would be worth, because a dollar today is worth less tomorrow and the next day and the next day. So our intrinsic value per share comes out to be $358. Now, that gives us a margin of safety of we're paying 95 cents paid for a dollar of value, which just means we're going to buy it for a 5% discount to what it is today in the marketplace at $340 a share. So am I right on the money? Maybe, maybe not. It depends ultimately on what other investors see within the business and the analysis that they've done. There's a lot of smart people looking at Apple in terms of it being the most valuable company in the world. There's definitely a lot of shareholders that are holding on to that business. And so I do not believe that it's overvalued or undervalued. I reckon it's probably pretty well on the money for where it should be. Now, there's definitely going to be some results that come out every now and then that'll bump up the optimism about Apple. But with so many people watching it at the moment, pretty sure it's going to be pretty much bang on the money for it being overvalued or undervalued. So is it worth $5 trillion? I'd say yes. The majority of the world believes so. And at this stage, it's not wildly overvalued. All right. I hope you enjoyed the video. If you'd like access to this calculator, you can get that just by clicking on the link in the description, as a whole bunch of other free resources and tools as well. And if you jump into there, I'll catch you in the community and help you out as we go. If you've got any questions, feel free to drop them in the comments below, and subscribe if you want to see some more videos just like this and other breakdowns if you are an investor wanting to sharpen and hone your skills. Cheers. Have a great day. And otherwise, check out this next video because YouTube reckons you'll like it.